Ladies and gentlemen, welcome to the Invest with Dennis channel. It is July 30th, 2026, and today we're just going to do a quick analysis of the recent sell-off in semiconductors. And as of today, they seem to be rebounding, but we don't know whether is this a temporal rebound, is this a rebound to the upside, or will they fall again? Because there's been a lot of pressure on semiconductors, especially the American and South Korean semiconductors from Chinese semiconductors. The Chinese are aggressively investing in the semiconductor sector, and this is due to AI models and AI infrastructure. Everyone is trying to be part of the game. We have corporations like AMD, as you can see on the screen. It is up 15% for the day, but if you look at the weekly, it is down 8%. So what is going on? Investors going back to semiconductors, or will this rebound be temporal? And I know a lot of people have invested a lot of money in the semiconductor industry right now, and the recent sell-off in semiconductors is a huge reason why it's highly recommended to dollar cost average other than throwing your eggs in one basket, especially when stocks are sitting at the top. We have, for instance, AMD. If you look at the year to date, it is up 130%. Another stock that I'll look at, which is part of this sector, is MU, which is Micron Technology. If you look, it's just loading right now. If you look at Micron, it is up 16% for the day. But if we look at the weekly, Micron is actually down 13%. If we look at year to date, it is up 200%. So it is normal. It's a normal situation in the stock market for a stock that is up at least 200% to have a pullback. I know some people just after earnings, people bought all the way at the top. It reached like approximately, it was trading at $1,233 a share, and now it's trading at $857. So that's almost a drop of about $300 a share. And I can imagine people are frustrated that bought these shares all the way at the top. But it just shows you how things can quickly change in the market. And hence, I'll go back to the same point I said, just dollar cost average. You can start with $5 a day. And you don't have to necessarily invest in one stock. You can invest in ETFs. That way you have a broader exposure to different stocks. I know there's also that human desire for people to invest in one stock and the stock goes up to the moon, 3X's, and you say, oh, I invested in this stock, it's trading at $10. Now the stock is trading at $30 to $40. There's that desire, but it's not a race, it's a marathon. Remember, let's focus on long-term investing. There's absolutely nothing wrong with day trading, but you really have to know what you're doing, and you really have to put your emotions in check. Let's look at another semiconductor, ARM. Let's see. We have another semiconductor, ARM. It's loading. It is up 6% today. And let's look at the weekly. It is down 15% for the week. And let's look at the year to date. It is up 119%. That shows you a pattern. You know, it's usually stocks that are in the same sector that kind of tend to perform the same way. That's why it's always recommended, if you're investing, to have a broader exposure of stocks in different sectors. That way, if one sector is not doing well, it doesn't entirely affect your portfolio, because you can be doing well in another sector. That becomes extremely important. And with this rebound today, I'm just curious to see how that will last. And I know people are getting excited right now. Oh my God, stocks are going up, semiconductors are going up. Let me invest in this stock right now. And with that, there's an article that I ran into. It was about AI investor Leopold Aschenbrenner forced to unwind all public stock positions after steep losses, sources say. Let's just go to this article right now. Let's just dive deep into this article. For people that are not aware of Leopold Aschenbrenner, he's really, really respected in the AI industry. He is a former employee of OpenAI, and he recently, 2024, decided to form his own hedge fund due to his wide experience in the AI industry, and he's a very, very knowledgeable and intelligent guy. However, as the article says, Leopold Aschenbrenner's hedge fund has sold all its public stock holdings, according to people familiar with the matter. Situational awareness posted big losses in recent weeks from declines in AI infrastructure investments like SK Hynix, the people said. Aschenbrenner launched the fund after leaving OpenAI in 2024 and quickly became one of the most watched figures in AI investing because of eye-popping returns. So this is a man, very young, intelligent man with a lot of knowledge of the AI industry. He's worked for OpenAI, and he decided to form his hedge fund. And this article is saying all his positions in public traded companies have been liquidated, right? So if you move further down, the battered 24 billion hedge fund founded by former OpenAI researcher Leopold Aschenbrenner is unwinding many of its trades after big losses on artificial intelligence stocks and bad bet against software stocks left it scrambling to raise cash, according to people familiar with the matter. So guys, this is just a quick lesson as well. This is someone who's very knowledgeable, has got a lot of industry insights in the AI trade. But when it comes to investments, there are huge risks that a lot of people take. And in his case, it's not like the stocks he invested in are bad companies. No, maybe the stocks were bought all the way at the very top. It is very, very normal to invest in a very, very extremely good company, but still be in the red because you could have bought the stock all the way at the top. Like I previously explained with Micron, in June, Micron was trading at $1,233 a share at one point in time. It has now fallen to like $857 a share. Is Micron a bad corporation? Nah, it's still a good company, but it was bought all the way at the top. And that has happened to me as well. So for anyone that's new in the market or getting into investment or is keen in investment, these are some of the examples, things that happen in the stock market. So you have to be absolutely careful when making investments. And if you dive deep further, some of the biggest holdings, the fund largest holdings at the end of the first quarter, that is Aschenbrenner's fund. They had Nimbus Group, SanDisk, Micron, Corewave. According to filings, all four of these stocks are down more than 35% this month. You heard that right. Most of those stocks that he had in his portfolio are down more than 35% for the month. That is crazy. And these are still good corporations, family. These are still good corporations. So you have to be very, very aware of the stock market because things can change. And another element of the stock market is geopolitics and also competition. Like I mentioned with the semiconductors, there's a lot of competition going on, especially with China, for cheaper conductors. That does affect the market, you know. And this is a very credible person. Aschenbrenner graduated from Columbia University as valedictorian at the age of 19. He purchased a bachelor's degree at the age of 19. Trust me, I think he will rebound. You're always learning something new in the market. Even for big investors or billionaire investors, there's always something new to learn about the market. All right. So that was just one of the quick articles that I came across. That shows you now us as little guys, we even have to be extra careful. And there comes another aspect of investing where it's also about risk management, where diversification is very important, you know, and traditional stocks, or should I say the stocks that are not fancy, those become very important as well. I would mention a stock I would purchase is like West Management. You all need someone to pick up your garbage and all that stuff. That is not going away anytime soon. Those are stocks you can also invest in, and if they have dividends, oh, those dividends can reap rewards. Slow investment, nothing fancy, never really talked about, and the next thing you know it, oh, you're up in the green. Let me look at West Management actually, just for reference. Let's see, West Management. Pardon my typing. Okay, West Management. Just a quick recap. All right, it is down 4% today. Let's look at it year to date. Yes, year to date, it might not look like it's a big percentage, but it is up 2%. So that's a stated corporation. I'm not saying you should invest in West Management. I'm just showing you how sometimes diversification in the market is extremely important, especially when stocks that are fancy or the software companies are not doing well. Let's look at the year. Well, the year is down 4%. Let's look at it on a 5-year basis. West Management is up 54%, guys, for the past 5 years. 54%. And this is a stock no one really talks about. So, guys, this is just some of the quick analysis that I had for today. We talked about semiconductors in relation to with China. We talked about Aschenbrenner having to liquidate his assets because he probably bought some software stock all the way on the top. And we also mentioned West Management as well. This is a corporation that's been there for a long time. It's not a fancy stock, but like the screen says, it is up 54% in the past 5 years. This is the Invest with Dennis channel. We do more quick analysis like this. We talk about different stocks, and we also talk about how geopolitics affects the stock market. Please feel free to like and subscribe on YouTube. We also share content in TikTok and Instagram. Please share the word. Let's build wealth together. And I will definitely see you in the next one. Blessings, guys. And one more last word of advice. Please invest wisely. Have a strategy. Leverage AI. Use all those tools you can to make sure you make wise investing decisions. Thank you.